Welcome back to the channel, guys. My name is Gordon Frayne. We are back with another video. Today we're looking at stablecoins and the importance of stablecoins for the growth of the entire crypto market. As always, if you enjoy the content, please make sure to give us a smash on the thumbs up button below this video. Hit that subscribe button, hit the bell notification icon as well, and there is a gift waiting for you in the description of this video. Go ahead and grab your completely free copy of the Rise of Bitcoin linked below in the description. Grab it now and let's talk about stablecoins. So stablecoins are like the underrated hero in the crypto space, in my opinion. What we've seen over the past 2 quarters, essentially Q4 of 2024 moving into Q1 of 2025, is a phenomenal increase in stablecoin market cap and the tokenization of stablecoins and fiat currencies like the US dollar in an on-chain capacity. Last time we saw a super steep increase in stablecoin market cap just like this is when we saw the markets moving back in 2021. We know that 2021 was an extremely bullish year across crypto in general. We saw stablecoin market cap rising from 26 billion all the way up to about 149 billion, and we even peaked a little bit later in January here into February at 165 billion for the entire stablecoin market cap in crypto. Again, we saw the peak of Bitcoin by November of 2021, and the correlation between a huge increase in stablecoin supply and the markets moving to the upside was very, very strong throughout all of 2021. What we're seeing now since Q4 of 2024, essentially in the immediate aftermath of confirmation with the new administration in the United States for the presidency and the most crypto-friendly administration ever, we have seen a sharp increase in the amount of stablecoins being minted on chain. We can see that rise from $172 billion or around $170 billion in total stablecoin market cap all the way up to where we're at today, approaching 226 billion in overall stablecoin market cap. If we jump over to the 2 leading stablecoins, which are Tether and USDC Circle, looking at these on the charts, USDC, since those November timeframe, the beginning of November, literally the day that we got confirmation of the new administration entering the United States, we saw a phenomenal increase from November 5th through to middle to end of March, where we're at today, literally a 70% increase in the market cap of USDC. That is 70% growth. That is 70% more stablecoin in circulation for USDC compared to November 5th of last year. In the space of less than 2 quarters, you've had a 70% increase in total market cap for USDC. I think what they started to do is they were starting to price in or bake in and front run the crypto-friendly administration that was entering the United States government by the end of January, and we are expecting some favorable stablecoin regulation this spring that I think is going to continue to help with adoption and more liquidity flowing into crypto as well. We will take a look at that in a moment, but this phenomenal growth, look how sideways we were moving for the entirety of 2024 almost before that confirmation. And again, we know there was a big run up in Bitcoin's price as we moved into the end of 2024 and into the middle of 2025, the middle of January 2025, but we've seen stablecoins continue to increase in market cap even since those middle of January market highs. If we look at those increases going back to even since the 22nd of January, we've had almost a 20% increase in USDC market cap since that time period just 2 months ago. If we look at USDT Tether and their market cap, again, remember Tether is much bigger in terms of market cap when we contrast it to USDC. Tether is at about $142 billion in market cap. It's almost 3 times larger than USDC Circle when it comes to market cap. So it's not increasing on the same percentage basis, but on a relative basis with the amount of new stablecoin that it's been minting, it is, not quite as much as Circle, but pretty much on par with 20% growth since those November 5th election confirmation results. Again, look at that huge surge when we had the run up here going into the middle of December. If you were watching this chart, it would have been a pretty good indicator for when to sell off your Bitcoin or altcoins, because we did have a market pullback right into the middle of January. And even though they have they've been minting more stablecoin on chain since the middle of January, markets are still down. Bitcoin is still down a little bit, but stablecoins have continued to mint more tokens and tokenize more stablecoin on chain. One of the big quotes that I'm interested in talking about today is the fact that you have Scott Bessent, the US Secretary of Treasury, essentially stating that he wants the US to maintain its dominant reserve currency. We know the US is the world reserve currency when it comes to fiat, and Scott Bessent wants to maintain that dominance in the world, and they will use stablecoins to do it. I think we're going to be seeing much clearer regulation about stablecoins this spring from the United States government, led by Secretary of Treasury Scott Bessent. He knows the importance of having and maintaining the US dollar as the dominant world reserve currency. And when we're moving into this digitalized world and a world of blockchain technology, he wants to maintain the US reserve status, and they're going to continue to mint on chain, making it much easier for businesses and people to transact with stablecoins is the first step in that process. And you're going to see a huge amount of clarity around this. And again, when we just look at the correlation from last cycle, you're seeing a huge increase in stablecoins all through 2021. We're starting to see that since Q4 of 2024. I think we're in for an exciting 9 to 12 months ahead. If we jump over to the Artemis terminal, we can see a breakdown of all the different stablecoins and all of the different networks where that action is happening. If I briefly jump back to rwa.xyz, we can see a breakdown by chain as well, with Ethereum clearly having the largest amount of tokenized stablecoins, followed swiftly by Tron, Binance Smart Chain, Solana, Arbitrum, Base Network growing very rapidly as well, Avalanche, Aptos, Near, and Optimism, ZK Sync, Cello, a few of the smaller chains having a portion of that stablecoin market share. But jumping over to the Artemis terminal, we can see how that growth has changed over the past 1 year time frame. So I filter this by the 1 year time frame at the top of the screen here, and what you can see is that we've got over $230 billion in total stablecoin supply, with the stablecoin supply by token, again looking at this growth since Q4 of last year, and the amount of USDT tether being printed, the amount of, in blue here, USDC being minted, and again stablecoin supply by chain, Ethereum still leading the charge, followed by Tron, BNB Smart Chain, Solana picking up a lot of new stablecoin minting in Q4 as well, as it is becoming a cheaper alternative to the likes of Ethereum. And once again, top stablecoin supply changes by token over the past 1 year. You're seeing USDT and USDC essentially still being the two dominant players in that field. Stablecoin active addresses by token, again, you're seeing most of that activity happening across USDT Tether, followed by USDC. Some interesting stuff picking up here in Q4 with some other stablecoins. But again, you're seeing Tron, Cello, BNB, Solana being the stablecoin active addresses by chain in terms of the leaders happening there. So again, if you want more data, I will leave a link for this Artemis terminal in the description. You can come on over and check out everything happening from a stablecoin perspective. But again, another chart from Dispatch by Nexo, just showcasing the aggregated market cap percentage change for stablecoins over the past year or so. Again, moving up and to the right, you're seeing a lot of growth in this space. Again, stablecoin market cap share by the different tokens and the respective chains. Obviously, Ethereum still leading the charge, but just visualizing these is very interesting to see how smaller players, like BNB, like the Base Network, seeing some very big growth, and Solana continuing to eat into the market share of both Ethereum and Tron in the stablecoin space. Final illustration is just again to show you that growth from an image taken from the Artemis terminal. You'll notice just how similar this chart looks to the one that we were reviewing here on realworldasset.xyz. Sharp move up and to the right since Q4. I think we're in for a very exciting 9 to 12 months. Greater regulatory clarity expected to come this spring in the United States for stablecoins. I think it's going to be one of the biggest catalysts for helping us to move into a world where it is more liquid, more easy to essentially transact and on-ramp capital into crypto. And you're going to see, I think, retail investors starting to continue to flood in once we see better regulatory clarity, along with businesses and a lot of institutions getting better clarity on how they can use stablecoins for their businesses and real world transactions. So that's it for today's video, guys. If you got any value at all, make sure to give us a thumbs up on the video below. It really helps with the algorithm. So please smash a thumbs up if you got any value at all. Hit subscribe, smash the bell notification icon. And again, there's a completely free copy of the Rise of Bitcoin linked below the video. Go ahead, grab it completely free, and we'll catch you in the next one.